Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's webinar topic is going to be about the law office or the legal office's expense management, how a legal office would manage both its client and its business expenses, two of the predominant expenses that a law office would have, or categories in which expenses would be managed. Today's webinar has been accredited for 1 hour of professionalism credits in the provinces of Ontario, British Columbia, and New Brunswick. So once again, welcome our friends and colleagues and legal professionals from all across Canada, specifically across these 3 provinces. I request you to log into your appropriate Law Society website and kindly use the title Law Office Expense Management and log in your 1 hour of professionalism credits. Okay? Fantastic. So we're going to be doing a bit of slide share, walking through different components of these expenses, highlights of how you can manage these expenses between trust and general account, and we're going to spend maybe the last 10 to 15 minutes walking you through by using uLaw as a legal accounting practice management software, just as an example of how easy legal accounting can make your lives by ensuring that you log all these details, the expenses in time, as well as the reporting capabilities that comes along with it to provide you with that just-in-time reporting capability, maybe come time for audit or for your monthly reconciliation processes as well. Okay, so like any other uLaw webinar, today's webinar has an agenda, and we're going to talk about the differences predominantly between these 2 types of expenses, right? The disbursements as well as the office expenses. Okay, so we're going to talk about what are disbursements, or otherwise called as client-related expenses. We're going to talk about office expenses, the differences and how you manage them. We'll talk about the opportunity you have as a legal professional to utilize your trust account and whether it makes sense to utilize your trust account to pay out these expenses directly from trust. What are the implications? And we'll walk them through that as well. Okay. Why not do all of it from the trust account? We'll talk about the key benefits of that. The types of general disbursements. So we'll look at actuals, certain unit rate expenses, such as fax or photocopies, mileage, so whether that's your travel mileage to court, or if it's out of province, or not even out of province, out of city, the mileage that you would charge your client as a disbursement, any travel time that you charge as disbursements as well, and or any outsourced work or consultancy that you may actually pay someone else but recover as a disbursement from your client. Okay? And last but not the least, from a disbursement perspective, we'll talk about the expectations from the law societies when it comes to the record keeping as well as the reporting requirements that they actually have in terms of the ledgers and journals and the expense books that you're required to manage and maintain and produce when asked for. Okay? And then we'll move on to the office expenses, some very generic types of expenses that legal offices have, your law society fees, your insurance fees, and then some of the common expenses that you may have as a business owner, such as your rent, corporate taxes that you may have to pay, any interest charges in the bank. And if you're a growing law firm that employs other legal professionals, then we'd look at salaries also as a as a business expense that the business incurs. And finally, we'll look at the expense book from a office expense management. What is the expense book, and how you as a legal office can manage the data that you already have in your legal office and drive the insights that gives you the key indications of where you're spending expenses more, whether there's an opportunity to reduce these expenses, And so really having a very smart and a data-driven approach to having a better performance in your business overall. Okay, so those fundamentally, we're looking at expenses to your legal office. We're having two categories. One are around the client expenses, otherwise called as disbursements, and then we're going to talk about your office expenses. Okay? All right. So let's start with a disbursement, and we'll start with some simple definitions. The disbursement, as we define it from Wiki, is the act of paying out or dispersing money, such as money paid, such as expenditures or cash, whatever the method may be. And the most important aspect to keep in mind is that it's a transaction that's been made on behalf of another person. In the case of a legal profession, this is a transaction that has occurred on behalf of a client. Okay? So in layman's term, the expenses that are incurred by your legal office on behalf of your client for a specific file or matter is what we call as a disbursement. Okay? From an accounting perspective, the bottom line is that you are responsible for recording that particular transaction to balance your books, when you spend it, and how you actually go about invoicing it so that you can recover it from your client. So one of the most important components of a disbursement is that you as a legal practitioner have the opportunity to recover that expense that you paid on behalf of your client. Okay? Mostly that arrangement, the formal arrangement of them, the client rather, being obligated to pay you back is something that's well documented in an engagement letter or a retainer letter. Okay, that's maybe the best opportunity for you as a legal professional to ensure and validate that that relationship exists, that they are liable, and it's their responsibility to pay you for certain expenses. And from a law society standpoint, you are required to manage the proper books. Okay? On the contrary, what is a business expense? From a layman's perspective, expenses that are incurred for keeping the lights on in your office or your legal office. Okay? And the major difference is that this is not a recoverable expense, so you can't pay rent and actually disperse it to a client and expect the client to pay for your rent. So this is a business expense that you have to pay for as the owner of the business to keep the lights on and run your business. So this is a separate type of expense, an office expense that's got nothing to do with your client. But from an accounting perspective, as well as from a law society's perspective, you still are required to manage this in your books, right? You still need to record it and manage it both from perspective of an expense book that the law society would ask you for, because an expense book is a combination of both the disbursements and the office expenses. And from your own business ownership perspective, it's a great tool for you to appreciate and understand how you're spending your expenses. And obviously, it's an important document that allows you to manage your profit and loss, right? At the end of the day, end of the month or year, the total revenue minus expenses pretty much gives you the profit or the loss of your business. Pretty straightforward. And I kindly request you to use the chat window to ask any questions that you may have at any given time during this session, because this is a 1-hour CPD. We tend to strictly keep it to an hour or maybe an hour and 5-10 minutes. And it's a Friday afternoon, and for friends in Ontario, you probably have some snow shoveling to do as well. So with having a very busy afternoon, I kindly request you to use the chat window to ask any questions as we go along. So we spoke about this. So the main differences between disbursement and business expenses: a disbursement is a recoverable expense, which means you have the opportunity to get that expense paid back by your client based on the specific file for which you had incurred that expense. How you recover that expense is through using that formal vehicle document called the invoice. So in the invoice, outline the particular transaction or a set of transactions or these expenses that you've incurred. Good examples are application fee or a court fee that you may actually pay in advance as part of that dealing with that file. Once you've incurred that expense, ensure that you keep a track of it, because you want to know for you to recover that, you should know what those expenses are and for which files that they've occurred so that you can invoice the appropriate individuals, right? Keep a track of them and make them part of the appropriate invoices. Send the invoice to the client and either do a trust transfer if there's a retainer involved, or you accept a client payment and hope that the client pays you in full, right? And that's one of the important reasons why you track them. So why track them? Because if you don't, then again, you're not going to be very sure about, what was that application fee for? What was that court fee for? What was that travel time for? What was that fax that I spent the money on, right? So keeping a tab and tracking them, not only specifically to the client, but to the client's file is equally important. Because you may be dealing with a client that has multiple matters, right? So if you can get granular enough to know that the disbursement that you did was for a specific file, even if you're dealing with multiple files for a client, it's just that much more simpler and easier for the record keeping. And that's how it's expected too, okay? And obviously the last thing is part of that expense, we also track the HST, GST, PST, or the provincial taxes that you may actually charge your client and make that part of that expense, right? We want to track that to understand your return and profit margin. Okay. So we've understood that disbursements and office expenses are two different types of expenses legal offices have. The core difference is the disbursement is an expense that you incur on behalf of a client, which is recoverable through an invoice, and it's important that you keep a track of it. And on the other end, the office expenses are expenses that you incur as a business owner to keep the lights on, to run your business, and to promote that business, which is not recoverable from your client, but you still need to keep a track of it for your own good. Okay? So now let's move on to understand, how do I manage disbursements? Are there best practices, certain things that I could keep in mind as I go about planning my legal life and managing these disbursements? Now, from a key step perspective, if you want to just take a step back, legal profession as an entity and covered by the law societies gives you the wonderful opportunity of utilizing vehicles such as the trust, which gives you the power to accept a retainer, which is money in advance for the work that you're going to be rendering. Okay, so you accept money in advance from your client even before you've begun the work, and that's the retainer. But, I've used this many times, and I'm going to use it again. With more power comes more responsibility, and hence there are a lot of boundaries and checks and balances that surround how you manage that money that you get in advance, right? And it's important to keep in mind that the law society is governing those boundaries, and you're going to be audited about how you regulate yourself within those boundaries, and if you're compliant with the necessary steps that you're required to take to stay within those boundaries, right? Because again, as a profession, you're then liable to the public and the opinion that the public has on that particular profession. So from a trust standpoint or a retainer standpoint, it's important that you don't misappropriate trust knowingly or unknowingly, and that you manage money in trust in the most prudent and trustworthy and compliant manner. So from a disbursement standpoint, you have the opportunity to pay out those disbursements right from your trust account. So when you accept a retainer, for example, so let's say your legal fee is $500, that's an example, and you anticipate maybe another $100 as an application fee, sometimes that don't have taxes on it. So let's assume you have $500 or $565 to make it simpler in Ontario, $500 plus taxes, $565, plus another $100 as a disbursement. There are legal professionals that actually ask for a retainer of $665. They ask that retainer up front because they know that it's going to take $565 plus $100. They record the disbursement. How was it paid? When was it paid? But how they transact that disbursement of that $100 is directly from that trust account. Because if you're not looking to make money on the client's expenses, right, not having a profit, or sometimes it may even be a loss margin, but if you're not looking to do that and it's on the actual value itself, then it may be in your best interest to pay that off right from trust, because it's a logical closure to that file. It's a peace of mind that you don't have to take the extra steps to generate an invoice. Because when you do it this way, when you manage disbursements out of trust, you don't have to take the additional step of generating an invoice, making that disbursement part of that invoice. Okay? Because if you've written yourself a trust check, or you've written that application fee right out of trust using a trust check, and when the application fee was withdrawn, it's withdrawn directly from your trust account. Okay? You still have to show it in the invoice. You don't have to necessarily show it only for the purpose of recovering it, right? Whereas if you're just paying out of general, you do have to show it in the invoice and wait for it to be recovered. But regardless whether you use the trust account, right, and then pay off those disbursements from trust directly, or, same example of 665, maybe you take a retainer of only the 565 for your fees, and when you spend your money for disbursements, you pay it out of your personal or your business general account, and then recover it through that invoice. Regardless of whatever style that you take, because you have these two styles, what's common across both these types of transaction is that you're still recording the individual client's name, even further the specific matter for which this disbursement was incurred. Okay, you're going to decide the date, the method of payment, how did you as a firm pay that disbursement on behalf of your client, and a reason for that expense. So we spoke about, was it an application fee, a court fee, was it a fax? So what was the reason for that disbursement? Just, again, making it simpler and easier for you to communicate it to your client as to why and how you're utilizing trust money, or why and how you're asking for payment for the work that you're doing in that particular file. Okay? Now, if you're not using trust account, which is the majority of the examples that we've seen in our limited experience working with legal professionals across all provinces, most of the expenses are paid through the general account. Okay, so it's paid up front, or rather it's paid by the legal office and then it's recovered back from the client as a payment. So if that's the style, important things to keep in mind. Okay, decide the cycle in which you want to include these disbursements. And we make this, and we say this again and again during these webinars, one of the most important components of your retainer letter should not only be that the client is liable to pay you for these disbursements, but also make it as clear as possible the cycle in which they should anticipate you charging them for these disbursements. So if you're dealing with corporate clients, we have legal professionals that do it on a bi-weekly basis or a monthly basis, or whatever expenses are incurred across the entire month. There are other silos of business where if you're dealing with individuals or based on the nature of your business, you may actually want to plan dispersing and immediately generating an invoice, so basically recovering it as soon as that expense occurs, because it's in the best interest of your firm that you do that. And when you do that, you're also building a sense of discipline for the need to track, record, measure those disbursements. Okay? One of the best practices that we've seen, especially when you're paid for it through general, is also having an opportunity by producing pre-bills. So before you actually generate an invoice that includes these disbursements, it's a good habit, it's a best practice to basically generate a pre-bill or a preview of an invoice. So technically kind of showing your client that this is what technically they should expect. And if there are any differences, if they did not recognize the need for a disbursement, if there's a dispute, that they have that negotiation even before you generate an actual invoice. Okay? Because if you've actually generated an invoice and then the client says, you know what, I can't pay you for that, then it gets into you having to reverse the invoice, regenerate a new invoice with a new amount, or sometimes providing discounts, write-offs, etc. Right? So to avoid those additional steps, one of the best practices we recommend, and it is actually recommended, is to provide a pre-bill, get the concurrence that this is exactly what they should expect, they're happy with it, and then generate the invoice. And once you have generated the invoice, especially if it's a general disbursement based on your payment terms, whether that's net 15, net 30, then you follow up to recover that payment due for those expenses and that particular invoice, right? So you either follow up by email, send them a mail, or call them to remind them to and request them for the payment. And finally, when that invoice has been paid, either through a check or a credit card, keep in mind that it's very important that you record that transaction of payment, match it to the appropriate expense, and recover that expense. So, if you paid from trust, then that's fine. But if there's a retainer of $600 you've actually paid through general and you've generated the invoice, keep in mind that if there's money in trust that you can transfer, which is your eligible trust transfer money, then please do make a point to generate a report that reminds you of that and move the appropriate trust funds into your general account as and when it's available and as and when it's prudently available. Okay, so we've spoken about two different types of how you can manage disbursements, either using the trust account and paying it right out of your trust account, or using the general account and paying it out of your general account. But the additional step out of the general is that you generate an invoice and then recover the client payment. Okay? I hope this is clear and hope I'm not going too fast. Please do provide your comments on the chat window so that I can alter the way I'm delivering this webinar. Now let's talk about, all right, how do you record these transactions? What are some of the key components to keep in mind when you record these transactions? Okay. So we spoke about trust and general. Here are just some examples to keep in mind about opportunities and instances or examples that are best suited for dealing with trust-related disbursements versus general-related disbursements. Okay. So we believe examples such as court fee or application fee are easier if they're paid right from the trust account. Okay, because when paid from the trust account, as I mentioned, you don't have to recover it. And we believe it's not your money after all, right? You're not looking to make money out of that expense. Just show it as an expense right out of trust. And this reduces the amount of bookkeeping that's required, which is the extra additional invoice and payment received that you have to do. But if you're paying out of your general or your business credit card, or sometimes you may actually pay it out of your own pocket. So you were at the, for a particular, maybe there was a photocopy that you had to make for your file and you forgot your wallet or purse, and you're at Staples and then you just have like $20 cash and that's your own. You may actually use that. We call it owner's pocket. There could be different nomenclatures for that. But regardless of how you do it for general, you still need to record the expense information. Again, I'm preaching to the choir, but many times repeating myself kind of helps emphasize the need that you record transactions as and when they happen with regards to the specific individual client and matter that it happened for. Okay? You record the expense information, the total amount, including appropriate taxes, right? The method of payment, so that you can have a better reconciliation of, if you paid out of your own pocket, then it's important that you keep a track of that so that when you recover it from your client, you're able to then move it from your business account into your personal account, right? Because that's actually you paid and the business owes you that money. And finally, yes, record the disbursement as it was paid from your general account, whether you used a credit card or your own personal pocket, or if it was someone else in the firm. So if this is a legal firm and your assistant paid for it, then the legal firm business owes that assistant that money. So it's kind of an accounts payable, if you will. Keeping a tab of who paid for it makes it easier for you to reconcile your accounts as well. Okay? Okay. So when do you recover this disbursement? Let's go back to the conversation around your retainer letter. And I'm sure legal professionals over a period of time are smart enough to figure out how best to tweak the retainer letter, right, based on the overall experience of having to dealt with similar files. So if you've dealt with small claims matters, you pretty much get a good hang of things, and you know it's best to generate an invoice as soon as that disbursement has occurred. Or if it's a criminal matter, or if it's a corporate matter, then as I said, it may be a bit different. Maybe you have a retainer with the corporate client that no matter how many times the disbursement occurs in a month, that you only generate one invoice or two invoices in a month, right? So at that time, then you pretty much are bound by your style of your retainer letter, what you've agreed upon with your client. But if you have it your own way, the best way to do it is to recover it as and when it happens. So make that transaction part of that invoice, generate a pre-bill, send it to your client, or if you can't do that, then yes, it's okay. Generate the invoice, send it to your client with all the information well recorded. If you've got a trust retainer situation, then move the appropriate eligible trust transfer from the trust account into the general account after you've generated the invoice, that is. If there are no trust or retainer money left or involved at all, then you send the invoice and then you wait for your net 15, net 30, net 7 to ask for a client payment. Once the payment has received from the client, you deposit it into the general account and then transfer that money into your owner's pocket or anyone else based on the situation. If the business paid for it directly from the general account, then you leave the payment right there. And all this ends up in these important accounting documents that are part of your law society's compliant requirements: journals, ledgers, books, and reconciliations. Okay? And kind of for the last set of slides that I want to emphasize on disbursements, I'll leave this slide for a minute. It really talks about some guidelines, best practices for considering the types of disbursements and whether they're a good candidate for trust and general or one among the other. Okay? So if you're dealing with, for example, billable, we spoke about court fee, application fee. I mean, you really can't change the court fee. It's a set amount by the jurisdiction. You're just going to pay that. So that's a great candidate for either using trust or general. Okay? If it's either a mileage, because that's what you're charging, or a unit rate, even including travel time, then it's best to do it through general accounts. If you're recovering expenses, let's say on actuals, so general thumb rule, if you're recovering expenses on actuals, then both trust and general are very good examples. If you're dealing with either a profit margin or a loss margin, right, then pretty much it's a general account. Okay? So if it's on actuals, both trust and general. If it's on margins, then it's always best to do it in general. So let's say you had an outsourced consultancy work. You had a stand-in. You had to pay another legal professional money for them to represent you, and that's part of the disbursement. But you had, let's say the stand-in charged you another $20 because of whatever the situation, and you don't want to transfer that $20 to your client. You may sometimes take a cut, like take a loss. So only charge your client $100, but end up paying your legal stand-in $120. Then you definitely have to use the general account to pay out that disbursement, right? So that's really the example for the outsourced consultancy with a profit or a loss margin. And we're going to look at this in a short while, in the last 10 minutes of the presentation, about the different types of journals, ledgers, the expense books that are required. But a quick snapshot of the type of documents that are required by law societies and that you are responsible for presenting, both for trust and general accounts, are the disbursement ledgers and journals, the fee book with appropriate taxes, and the trust general ledgers with the general journals in terms of all the transactions over a certain date range. Okay, so it's traditionally done over a period of a month, where law society auditors may ask you for your trust and general ledgers, your expense book, and your general journals for the month of October or November or something like that. So it's generally for a date range, which includes all the client information that had disbursements during that date range. Okay? And these samples, the snapshot of these images were taken out of the bookkeeping guidelines from the Law Society of Ontario, but we've actually done our homework to understand that there are, the bookkeeping guidelines across the other provinces that we're talking today, New Brunswick, British Columbia, have a very similar thought process, similar template that they follow as well. Okay? So if you look at a trust ledger, you're pretty much capturing the date, very important, what was the receipt, what was it for, the balance as of that date, and then basically a reason for the disbursement and the balance as per the latest date. So we'll look at this example in further detail as we start to use certain examples and generate ledgers and showcase that to you. Okay? All right, so hopefully that covered one of the fundamental important types of expenses that legal firms happen to come across every day, which are the disbursements, various types of disbursements, the opportunities between trust and general account, the importance of record keeping, and how each and every transaction has certain particular first piece of information that is important, such as your client, your matter, the date, the method of payment, etc. Okay. Now let's focus on the other side of the house, which is really the expenses that you incur as a business owner or as a business to keep the lights on and to run the business and to be exceedingly profitable as a business. Okay. So we'll just reiterate those definitions, which is just the same slide again. So office or business expense is that expense that's used. And good examples that we have here: rent, purchase of any laptops or iPads, Android tablets, any computers, software, furniture, whether, you could have depreciating assets. But again, expenses such as, as I said, law society fees, one of the first set of expenses that you may occur, whether you have a yearly plan or a monthly plan. These are expenses that need to be taken care of and recorded. Any insurance fees that you pay, any stationery that you purchase on a regular basis, pen, pencils, paper, etc., right? But bottom line, from a layman's perspective, these are expenses incurred for keeping the lights on in your legal office. From an accounting perspective, there is importance to record it in books so that you can balance your accounts and really spend and manage the expenses for your businesses and take smart decisions so that you can be looking to improve or reduce these expenses. Okay? I think we've had enough examples shared, but here's a quick snapshot of some of the types of expenses that you may expect to have in your legal office. We've spoken about office management such as furniture, stationery. You've got law society fees, telephone bills. That's one big bill that you may have in your legal firm. Marketing, right? So advertisement, promotion. There's the rent and maintenance costs of your property, corporate taxes, salaries, as I mentioned, for a growing law firm, and including bank charges and dividends. Okay? Gas, meals, depending on the situation, and part of that being office expenses. Now, how do you record them? They're no different from the disbursements, as if you are to build a discipline. Obviously, these are not recoverable expenses, and hence it's only in your best interest as the owner of the firm to record them as and when they happen, right? Because sometimes, it's best if it's fresh in your mind when you don't have to really dig deep into your memory to really understand what was that $3.25 Starbucks meal for, right? Or sometimes we tend to not track it, either as using a legal accounting software or expense management software, sometimes losing bills, losing receipts. So quick thumb rule is record them as and when they happen. And similar to disbursement, some of the particulars of that expense are very similar. The one big difference is these expenses do not relate to a client and or a matter, right? It relates to your office. But other particulars such as the date, a reason, who was this paid for? Was this Staples, Walmart, Starbucks? Who were you paid that expense to? LSO or Law Society of British Columbia or other provinces. The insurance fees, whichever company that you're paying that to. And for your own smart data analytic requirements, capturing the type of expense. Was this a marketing type of expense? Was this a rent, right? So really capturing the type of expense that this was for, the amount, obviously including taxes, method of payment, again important for your reconciliation purposes. Was this paid out of my credit card? Was this paid out of my general account? Was this paid out of my owner's pocket? Again, going back to your general reconciliation becomes a very important component, knowing which transaction occurred in which bank. We spoke about who was it paid to and how was it paid, right? We'll definitely look at how you can quickly record these expenses as well. And we'll just, you can use uLaw just as an example. It's definitely not a show off the uLaw capabilities, but just to use uLaw as an example of how you could use a legal accounting software to record both disbursements and office expenses. Okay. And some of the documents that are to be maintained from an office expense standpoint, you have your expense book, you have your provincial taxes payable statements, your expense statement, that becomes a big part of your profit and loss, and if you had any borrowings, the borrowings report as well. Okay. And what we're seeing is with the advent of technology, being a modern legal professional, you now have the capabilities to drive key analytics, fingertips, right on your phone, apps that give you the data so that you can make just-in-time decisions, smart decisions about your business. Okay, whether that's the total expenditure in a particular time period, keeping a tab of the highest paid expense. If you're actually incurring high expenditure from rent, knowing what you're doing. So first it's to track, then it's to measure, and then it's to make decisions based on what you've measured, right? To react based on that. So when you're reacting, so maybe the rent has been really high or has grown tremendously over the last few months or years, maybe it's an opportunity for you to rethink your rent strategy. Maybe it's a great opportunity for you to just buy a property if the rental expense is really high. What are the ratio of expenses between a monthly, quarterly, or yearly perspective? What types of expenses do you incur the most? Is it office expenses, or are there other types of expenses that you incur? What can you do to maybe bring them down? But for you to make those logical, smart business decisions, it's important that you have such information readily available to you in simplistic dashboard and analytics way, because you don't want to be crunching numbers. You don't want to be just generating report black and white documents and then spending time. You have technology that can do this for you, so it's in your best interest to take advantage of that and make smart business decisions, right? And last but not the least, time being the essence, time being money. It's in the best interest of the legal professional to utilize any tool, technology tool that can help them save time. This could be anything based on the comfort, based on the financial aspects, based on the support system that you already have. But no matter what kind of situation that you're in, always be looking to explore opportunities to reduce the amount of time that the manual time that you put in generating these documents and tracking them. We've seen time over time that legal professionals who can reduce the amount of office keeping, bookkeeping effort have always, had more time to spend towards other things in life, whether that's giving back to the society, giving back to their family, giving back to their profession, or just doing better in business in general. Specifically, we talk about legal accounting software because it's a purpose-built software that allows you to capture both disbursements that are expenses incurred on client's behalf, as well as office expenses that you incur on behalf of your business. And when you combine that in a single product, it also gives you the appropriate taxes that are payable. It kind of really marries both the taxes received and the taxes paid and gives you a snapshot of the type of taxes that you either owe the government or the government owes you. And it's a single, point of truth to drive those key analytics about your businesses. And last but not the least, some legal accounting software do go the long, walk the extra mile to give you compliant-ready documents, which is obviously a very key component of being a legal professional. Okay, you still obviously you have the freedom of using an Excel sheet, using whatever tool is important. Do use the appropriate tool that's meaningful to you and your business, but do explore always better tools that can give you more power to run your business and your professional life that much better. Okay. So today's CPD, once again, for those who just joined us a bit late, today's CPD is the Law Office Expense Management. It's for 1 hour of professionalism CPD credits across the provinces of Ontario, British Columbia, and New Brunswick. Okay. We are applying for the credits in other provinces in the country. I've yet to get that, but for now, it's these 3 provinces. Friends who joined us today, you can log into your individual law society portals, either search or type in Law Office Expense Management, and you should be able to log the 1 hour of CPD credits. Okay. Last but not the least, we are a Canadian legal accounting practice management software company, and compliance in a very cost-effective and a convenient way is what we strive to be. And during your exploration, to keep us in your mind, I'm going to spend, and we do offer a no obligation 30-day trial so that you can try us out, and if we do a good job of earning your business, we look forward to serving you as our client. I'm going to now shift gears real quick. It's 1 hour of professionalism credits. Okay. So I'm going to use real quick an instance of uLaw. Often use this fictitious legal professional, Roger Moore, as a lawyer in Ontario. This could be in any province. I'm just going to use that as an example to showcase how a legal professional should anticipate using a legal accounting software to make life easier of both recording, transacting, generating ledgers, journals across both the disbursement side as well as the office expense side. Okay? So first, let's go with the simple workflow. I have 15 minutes, so hopefully that's enough time to cover both. So I'm going to go with a simple example where let's create a client, maybe create a matter for that client. Oh, okay. I've just got a feedback from one of our clients here. If we can go with office expenses first. Okay. If that's okay with everyone else, I will start with office expenses first. So, we'll start with that, and then I'll jump into showing you how you would do your disbursements for a client. Okay. So if I were to start with office expenses, I'm quickly going to jump into my accounts tab that you see here. Basically allows you to manage your business accounting as well as, just going to quickly restart this. As I get set up and start to load my uLawPractice, I kindly do request you to either email us at support@uLawPractice.com, or you can just type it in the chat window of your attendance with your email, first name, last name, and email. Sometimes if the law societies were to audit us for having provided this, we could always share the appropriate names of those who attended the session. In addition, we're also going to record, or in fact we are recording this session, and will be available to you to review again in our YouTube channel as early as Monday, Tuesday next week. Okay, so for those who want to join us late or need to look at the entire video, you can always dial in on Monday or Tuesday in our YouTube channel and search for this topic and this date. Okay, the question that's being asked again is the number of hours. This is a 1-hour CPD credit for professionalism. Okay, hope that answers that. So let's jump into the case of how we would enter office expenses, and just using uLaw as an example. Legal accounting software should give you, very similar to your, accounting softwares, a chart of accounts that allows you to manage your assets, liabilities, capital revenue, and very importantly, your expenses. So we give you the opportunity to manage office expenses across various categories. So you've got printing, stationery, law society, disallowed expenses, any office supplies, and you can create your own. You can create your own set of categories under these office expenses. So there's multiple ways in which you can capture office expenses in uLaw. One, you can enter them as and when they happen. We have a lot of legal professionals who do this due diligently every evening or the following morning of expenses that have occurred either the previous day or the same day, right? So you're going to expense, office expense. And as I mentioned, important particulars of any transaction include the date when that particular transaction occurred. You should be able to backdate this because sometimes you may need to catch up on older expenses. So I'm just going to go back in time to the 12th of November, understanding the type of office expense this is, right? So this could be rent, but we have the opportunity to classify these expenses based on some high-level categories, and then under those, then you have subcategories that you can manage, right? So if it's office expense, this could be printing stationery, this could be LSO fees. So you can define these subcategories so it's best for you and it's personalized for your legal firm, okay? You've got laptop, Google marketing, laptop expenses. Let me start with rent. So a description that outlines what was this for. So you could say Minto or office rental, November 2018. If they've given you some kind of reference number or invoice number, you can put that in. You can put in the post-tax so that uLaw would automatically calculate the pre-tax and the appropriate taxes that you must have paid, or you can put in the pre-tax amount and we automatically calculate the tax and the post-tax. Okay? So we've captured the amount, and the last set of questions around who did we pay this to? So let's say this is Minto Realty Inc. And how did you pay for it? So maybe you paid it right off your general account. And these are accounts that are meant to reflect real-life accounts that you have in your banks. So this could have been a check, this could have been a direct deposit, bank transfer, email transfer, or you could have paid this out of your own money, right? You paid cash or you paid out of your owner's debit, owner's credit card, doesn't matter. You can still, so it's important, as I mentioned, to capture how you paid for it so that you can reconcile those appropriate accounts in that month. So let's just go with email transfer, and let's say you're dealing with RBC. Let me just give you a reference number. If you don't have it, generally it's just, you can just type in the date when the transaction occurred. So on the 12th of November, you've had about $1,130 of rental payment. Okay? That came out of your general account. That's one type of expense. The other type is when, if let's say you're a law firm and you have an accountant and you have the shoebox way of doing things where you're throwing all your expenses as and when they occur and into this little box and you're handing over that box to your accountant. In which case you can just say batch import, or either you can do this if you're doing a bunch of 5 or 6 different expenses at the same time, or if you're handing this over to a bookkeeper, this is a feature that they would appreciate. So this is where you could say stationery, or you could say Best Buy. It was $100. It was an office expense that occurred today. Paid out of the general account. You can actually just say save an expense too. Automatically goes into your office supplies. And do the next expense as well. Okay. This could be paper, $20, Walmart. And this could have been out of your business credit card. So it's as simple as that to be able to enter expenses as and when they occur. But the appropriate ledgers and journals and law society documents happen behind the scenes. So if I were to generate a document, and let's say we have a compliance panel, so you could start with, as I said, the appropriate documents are all available under this one compliance panel. And I'm going to start with the expense book. Okay, and let me do that for the month of November so that it can relate to what we did today. And here's the expense book for the month of November and what it should automatically have. Again, as you can see, the expense book not only has the expenses that have occurred for clients, but also expenses that have occurred for your business. So this particular expense on the 2nd of November was for a client. And this is why it's important, because this expense book is a combination of both disbursements or client-related expenses and business expense, right? And the appropriate taxes. So there's a court fee that was paid for, $90. No taxes. But if you look at our example, we had our office rental of $1,130. It divides up the total amount and the taxes. Very important. And there's other fees as well. You've got the monthly LSO fees that was sent out. I think we've had an example where on the 13th we've had another $1,000 of the same example, so I'm going to skip that. The other example we looked at was paper that we purchased at Walmart, and that was the tax, $20, and then, the expense that we had at Best Buy. Okay, so this particular document pretty much captures all this record keeping. Also tells you in a very simplistic way where your expenses are going. About 11% of your expenses this month went towards miscellaneous, but almost 81% went towards rent, because that has contributed quite a bit to the overall expense that has occurred this month. Okay? So this pretty much tells you by business, by client, what the total expense divides up to. So only 7% was expense on client, which is not great. Almost 92% was office expenses. Now you can drive the same set of analytics. We spoke about analytics. We could drive the same set of analytics right out of the analytical engine, where you can now compare this. You can look at expense chart by category for this particular month. And obviously, again, rent being the highest. And let's say you want to compare this to the overall year, you can do that too. So how is the month of November comparing to the overall year itself so far? Am I doing well? Am I not doing that great? So you can see my rent so far is about 8.2%. Right? Out of which almost 90% of that was from the month of November. Almost 22% was expenses on clients. This is what gives you the kind of capability to make smart decisions about reducing expenses, or at least acknowledging where your expenses are going. Okay? So hopefully I gave you a simple example of how you can enter expenses and have that available across office expenses rather, and have that available. You can obviously do an expense report, a profit and loss report. If I were to do this for the month of November, the profit and loss statement would obviously include the expenses incurred that particular month, the revenue generated. You can generate the fee book as well, a click of a button. So if you look at my profit and loss statement for the month, it tells you the expenses. The total profit and loss is about $3,000 of profit, because you had about $5,800 worth of revenue, about $3,000 worth of expenses, and that's the profit and loss. Also tells you where that went into. Okay, that's the revenue by chart. That's the monthly expenses chart. Now let's quickly jump into the example of disbursements, because that can be a little bit more involving. I only have another 5 minutes, so I'm going to run through this real quick. So I'm going to quickly add a client. I'm going to say community legal service. I'm going to jump right into creating a matter for Mr. Sunny, Mr. Rowe. Okay. Sometimes it tends to take a little bit more time than you would think so because of the webinar situation. It's already refreshed in my screen, but I can see that it's not yet refreshed on the webinar screen. Hopefully this is, there you go. So let's quickly create a small claims matter, offense issue, most popular one that I always use. And let's take that example of the 665, and I can show you how you have the opportunity to pay directly out of trust. And maybe we'll do 765, right? 565, we'll do 100 out of trust for application fee, and maybe another 100 out of the general for court fee. And we'll look at both situations. So let me just quickly say offense issue matter, and I'll just make this a flat rate. Work completed. let's say that I completed it today on the 16th. For the purposes of the demo, and I'll just take 5 more minutes, let me quickly accept a retainer, backdate this and accept a retainer earlier this week. So I'll go into my Trust tab and I deposit a new retainer on the 12th for $765. And let's say I got a check. A check into my Trust account. I can give them a receipt. So just trying to build an example where you've accepted a retainer from this client, Mr. Sunny, and you deposit that into your Trust account as you rightfully should. Very important that you should provide him a Trust or a retainer receipt. For the purposes of time today, I'm not doing it, but it's a great habit to do so. Now, when time comes to disbursement, and we made it simple from a data perspective, entry perspective, whether it's a trust-related data entry or if it's a general-related data entry. So let's assume that you've got a $100 disbursement right from your Trust account. So you can basically say pay disbursements from Trust, and this is for $100 that went out, let's say, on the 13th, and you wrote a Trust check number 76675, and this is the application fee paid to the Ministry of Finance, okay? And you can even print that check. But now this $100 is a Trust disbursement, and you're going to notice that being removed from my Trust receipt directly. Whenever the Ministry of Finance deposits this check, that money is going directly out of my Trust account. I don't have to include it just to recover it. I don't have to recover that as an expense because it's already taken right off my Trust. Okay, so that's the first example where the Trust receipt itself dropped and the projected balance also dropped. You don't have to recover it from your client. But if I were to take an example of a general disbursement, so let's say I'm paying from general, and maybe this occurred on the 14th, and this was a court fee. Obviously, I tracked the tax, pre-tax, maybe it's tax exempt, and legal accounting software gives you this flexibility of being able to enter not only your disbursement, but also reporting it back to your business as an expense because you paid for it from your business to begin with, right? So you paid it to the Ministry of Attorney General, and let's assume you used a credit card and you paid for a general account check, okay? So this is a $100 disbursement for court fee, which is required for you to be recovered. But we tracked all the particulars of the date, what was it for, when did it occur, how did you pay for it, etc. Now it's important that you generate an invoice, okay? And as I've mentioned, it's a great, great habit or a fantastic way of ensuring that you're doing the right thing by generating a preview or a pre-bill, which pretty much tells you the work completed, right? It tells you the court fee. So this is the $100 court fee that is necessary to be recorded and recovered. So it's made as part of your invoice, right? Now, the Trust account information is also mentioned so that it's a complete invoice, it's transparent, and your client has no questions to ask you. And interestingly enough, you can notice that there was a $100 disbursement taken right out of the total retainer. So this is not recovering, this is just giving information to your client. Buddy, you paid me $765, I've used $100 towards a disbursement out of Trust, and that's what's left. And in addition, I've got $565 and another $100 of disbursement done, summarizing that right now, if I would invoice you, that's the amount due left in your retainer. Okay? So you send that, and let's say he's happy with it, you can actually generate the actual invoice. Skip the preview, just do the actual invoice, choose the date. Okay? And once you generate that invoice, that's when your capable or able to move the eligible trust transfer from your trust account into your general account, because there is a retainer involved, right? So by clicking the question mark, it tells you that's the $665 that you can now technically transfer from your trust account, because that's the money that you've earned through the $565 of legal fee and the $100 court fee that you've already paid for. That's the money the client, has freed up of the trust money that he's already paid you. You've done all the right things, the legal work, as well as the $100 disbursement, moving it into your general account. And if you, let's say, do an electronic fund transfer in the province of Ontario, we also allow you to fill out a Form 9A automatically. Okay. And now if I jump into my compliance documents, starting with the expense book, and again, I'm just going to run through a bunch of documents and then call it a day. And we spoke about the general disbursement. So let me first start with the expense book, and I hope you're able to appreciate the difference. If you look at it, we had Toby Maguire, we had the business expenses, and now we've got this line item of $100 as a court fee for Mr. Sunny Mistro. If you notice, you don't have the $100 application fee because that went out of your trust account. Okay? Very important is your general disbursement. Keep in mind, it's a combination of both your office expenses as well as client-related expenses as well. Okay, so remember we had the Best Buy, the Walmart, right? And you had the court application fee for the Ministry of Finance. Okay. Now if I were to do a trust receipt for the month, that should have the ledgers that reflect that disbursement. Okay. You can do a trust ledger as well. So once the data is in, as a legal professional, whether it's yourself or your assistant, whoever is dealing with the bookkeeping and the record keeping, document generation should just be a click of a button, pretty much. That saves you time, and if it is, it certainly saves you time. It gives you the time to spend on other things. So if I were to look at my trust ledger for Sunny, $765 came in as a retainer. There's $100 of disbursement for the application fee that left. And there was the $565 of the particular legal fee, and there was $100 that was also transferred as part of the trust transfer for the court fee that was incurred. Okay? And here, for that fence issue, it's the $765 of the trust that I received as a retainer. I could do the same thing with the trust payments as well. Okay? Here is that $100 check paid to the Ministry of Finance through the trust transaction for that fence issue. Again, it's important to capture the client, but also specifically the file number. So this pretty much tells you the client and the specific file for which this $100 was dispersed. So with that, I'll probably like to just go back and wrap this webinar. I hope this was your time well spent and informational. This webinar for Law Office Expense Management is, again, it's a 1-hour professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. And we pretty much covered the 2 major types of expenses, your disbursements and your office expenses, and how best to manage them. And we looked at examples, both trust and general disbursements, and how best to manage them. And feel free to send us your comments by both email, or you can put it on our chat, or best to send it to support@uLawPractice.com with your feedback and comments. Other areas of topics that we could cover to make not only an engaging learning experience, but something that will be meaningful for the community as well. Okay. So thank you once again for everyone who joined me today. Hope you have a fantastic weekend, and we'll look forward to seeing you at our next webinar. Thank you.